result. And we're going to go to our first caller. We've got John in Philly. John, how are you?
Basil, I'm very good. Hope you're doing the same, and thanks for taking the call.
My pleasure.
Basil, I wanted to ask you, please, about what you've described as a Coda phase. Just by way of review real quickly, back in 15 and 16, as the market had topped and then pulled back, you spoke very regularly about your expectation that another rally phase, a Coda phase, would take place.
Correct.
My very specific question for you here and now is this. Can you articulate, or I'm asking you, if it's possible for you to articulate the things that you see that would support the idea that the Coda phase is in, has topped, and now we're doing something much different, and the factors that suggest the Coda phase is not yet over. I'd like to just ask if you could articulate those factors that support both possibilities. Be very helpful to me.
Okay, very good. I was actually just looking here. I got a lovely email from a listener over in the United Kingdom asking pretty much the very same question that you just asked. I'm just trying to see it because it was, I will find it. There it is. I've got it. Okay. So let me just click on this, and I'm going to place it somewhere over here so that I can see it. And the thinking is this. If you look at this New York Stock Exchange Composite Index that I've got up here, is on the left is the daily, in the middle is the weekly chart, and on the right is the monthly. If you look at the monthly chart, this is the very broad New York Stock Exchange, over 2,000 stocks. 13,635 was the high in January. It came down very sharply, rallied right to the 14-period moving average in the monthly, rallied sharply to a single leg A underneath the previous high, and then made that arch formation I always talk about. I call the lowercase h, and then it comes tumbling down, breaks the left side support of February, but rallies back up again. And then this month, needless to say, is an ugly month, and it's gone to a leg C in the monthly chart. The MACD is very weak. Stochastic is very weak. I've got a left side, right side price time match, which comes to this month on the very shortest that it could ever be. I'm not sure it's going to do that with 11,400 to 11,300 as a possible test. If it doesn't actually do that, but rallies instead, it extends that out. Now, the reason why I wanted to bring that up, because it's I could give you other instances, but the January top in the Dow was 26,616. It went to a higher rebound when it went to the October high of 26,951. Apple has matched very much the pattern in the Dow. Now, Apple is a pretty. I'm going to talk about it in a kind of a macro sense, as if it was like the old General Motors of the 1920s, that was really surrounded itself with all the technology and everything that you could think of for that particular period, and produced cars in the leading fashion, even though Ford had the greatest number. But Apple is right there in high tech in this particular age. The reason why I bring it up is because I wanted to just point to a couple of technical things as well as socio-political, because this Apple also is in a sense a political thing, because it goes into China, and it is also a technological issue as well as the technical chart of the Apple itself in the monthly. Now I've got that out of the way. Let me go back to the New York Stock Exchange, and now I can cover a bunch of things. So the question was, and it comes slightly different to what you're asking, and it was, hi Basil, I watch your show from the United Kingdom when possible. Very impressed with your show and your Chapman Wave. I invest only in United Kingdom equities, not professionally, but when I have the time for my pension plan, which in the United Kingdom may self-invest. I remember a while back you were suggesting higher prices for U.S. equities in 2019 with your Coda phase. Such prices will be accompanied by such things as construction of world's tallest building, other indication of largesse and opulence. With the weakness we have seen, do you still feel this is the case, or do articles such as the link above, and that link above is really interesting. It has, I showed it to subscribers over the weekend. I actually took that same link. It says China dominates skyscraper construction. Now I'm going to go introduce you to, I hope this is a little bit of a roundabout, but we are at such a particular point. I think taking a little time, at least for me, to explain what I'm looking at makes sense. Now, the FXI, which is the China big cap 25, it's called, made its high, a round number high, January of this year at 54.00 in a huge big cap ETF, round number high, all-time high. It's amazing. Peak E in the Chapman wave, and it came down all the way to a low around about 37 in October, and it's trying to bounce, and you can see this huge cup formation. So I'm trying to introduce you to areas that I'm looking at, and now I'm going to add something else. I over the last month, I've been going right back. I've been reading all my 1929 books. I've been going through, I got a fabulous book. I can't even remember what the name is right now. And it's got the history of the United States it's capsulized, and it has all these different segments, and it has all the different years, and it has what happened economically, what happened politically, what happened historically, etc. And it's really very, very interesting. In the break, I'll try to find the name of the book, because it's really, it's just great to have. I'm looking at this, and I think that there is a chance, and I'm now thinking it's a greater chance than a lesser chance, that sometime in the first quarter, I don't think we're ready for it yet. I think we've got to go through until Trump can figure out how to minimalize the Democrats' just constant pushing of impeachment, which I think they will let go at a certain point, but they're going to do that. And until the Republicans are able to congeal, just get some thoughts together to be able to work on the programs that would benefit the stock market. Now we're talking stock market. I'm not going to go politically. I'm just talking stock market. Best, I think that if you look at the China FXI index, at this particular point, it isn't so bad that China has to say, oh my God, we love to look at the long term. We only do things in the long term, but we better be looking at this a little differently. I think they need about another couple of months to be able to decide that, you know what, if something like the FXI goes under 28, the February low of 2016, it's going to be really difficult. And I think they're going to be a lot more accommodating than they've ever been before. And I think it's going to suit the stock market here. That's number one. Interest rates, I think, for at least the next 3 months or so are not going to be an issue. I think they're going to start to garner strength later in the year. So my answer to you is, I haven't changed. I have to look at the timing a lot closer, but I haven't changed my view that we are going to still have actually, there's a lot more I wanted to talk about. I don't know if you want to hold on, John. If you want to go back into the den and listen, that's fine. Otherwise, hold on if you've got questions. But I'll cover this in the next segment. So here we go. We've got a break coming up.